Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed and gregschnell.com. Okay, well, we continue to try to rally here. We had our high last week on Thursday. And we're, 2 weeks ago, I guess, on Thursday. And then last week we pushed up on Friday to try and test that high. And now today we're just kind of wobbling around. We have the Fed meeting today. So people are cautious, just kind of waiting to see what goes on with the federales. So as we await that, I think the market's just going to kind of stay flat in here, but I'm expecting more of a heartbeat after the Fed finishes up. And then next week we have quadruple witching. The one thing that I want to clarify, there's a continued emphasis on referring back to last year and how last year's December was terrible and this one could be the same and all that. So last year, just to give you an indication, on some of my indicators, I was at 0 out of like 100% in terms of bullish momentum. And right now we're at 70, which is almost one of the highest readings you can get. I think I was 74. So we are in such a strong place right here. Obviously it can weaken. I think the bigger thing that we want to talk about, though, is trying to not let people talk you out of the market and use the data to help hold us in there. And all of the breadth indicators, if you check the video that I did on the weekend on Sunday, it's on the Canadian Technician blog. You'll find all of the breadth indicators, the advanced decline lines, the bullish percent indexes, the percent above 200-day moving average. Everything is still ringing bullish. So hopefully that gives you some confidence. Saudi Aramco had their IPO last night, and the shares listed in Saudi Arabia, so it's not like you and I could buy them directly, but they will be part of some of the big mega caps, according to Bob Pisani. Some of the big ETFs like EEM, it'll come in at 2.5% of EEM, which is just shocking that one stock could do that. But the company itself is 50% larger than the entire U.S. market's energy sector. So add them all up and add another 50%, and it's that big. It is 50% larger than Apple Computer or Apple Inc. So it's a big company. Anyway, so that one came out overnight, and lots of data on that one. So I think as we roll forward here, this is an important thing that we have, that we're aware of how Saudi Aramco trades and if it comes to the US and how much influence it'll have. But it looks like it's starting to get into a lot of the indexes and that kind of stuff. So it'll really make a difference as oil tracks changes. So one thing I heard this morning, and again, I'm in Alberta, so when I wake up, it's 7:30 my time is when the market opens. And listening this morning, and Cramer suggested the China deal is too fluid. And one of the things I don't like, or I like, is the fact that Jim Cramer and Larry Kudlow used to work together. And if there was probably a quiet pipeline of information behind the scenes, I would suggest that those two would probably have the tightest one. So if there was a way to release information into the market, it would be through Cramer. And anyway, I was very surprised to hear Cramer say that the China deal is too fluid to predict the outcome. I thought that was a huge statement this morning. Anyway, so one of the things that made me think of, and I've been, it's always an important thing is to keep track of how the defensive sectors are doing. So one of the things I thought I'd share today is if I was going to start to rotate into safety, first of all, how would I do that? And then in terms of setting up the charts and working through the actual chart list. So that's what we're going to do today. We're going to jump in and look. Doesn't mean buy. Again, all of my indicators are still very bullish and they could change on, the China news failing, or they could change on the Fed, or they could change on quadruple witching next week. But right now, everything is very bullish. And usually it takes roughly 2 weeks for my indicators to go from really strong to cautious to starting to get negative. So I have some time, but right now, I haven't had any of that. And again, the market's been flat for 2 weeks, so we're starting to lose our upward momentum. But we'll just keep watching it. I think we'll find out here. Okay. So first of all, oh, I forgot one thing. Let me go back there. I do want to show you this slide. This is the schedule as named by Zach and Rachel and Greg. And what the schedule is the places where I'll be speaking if you wanted to hear me over the next little while. So I'll be doing a market vision with earnings beats on Friday at 11 a.m. Eastern time. And you can go to earningsbeats.com to catch that. In case you can't see the slide here, anytime you have a link, it puts it in a blue and it's on background, so it sucks. Anyway, earningsbeats.com/marketvision2020. If you go to that website, you'll be able to find more information. So I'll be at the Calgary CSTA on December 17th. And then in January, on January 4th, we're going to have the big Market Vision 2020, and that's all of the StockCharts analysts getting together to try and share their ideas for 2020. Hopefully you'll find that good. And then on January 20 to 25th, there's a wealth365.com summit, and I think Mary Ellen and I are both in that one. So if any of that interests you, let us know. Okay, let's get back to the other show. So now here we have the current market situation, and the Dow's down a little bit. I think Home Depot was weighing it down a bit, and Chevron wrote off 10 billion. So that was a bit of a problem. And that's another company writing down their shale assets. I continue to think oil will be one of the opportunities for 2020. And I know most people think that's a crazy thought, but when we work through cyclical industries like the oil business, there's some really great stuff out there coming for the oil business. And I think if you start just watching over there, if nothing else, you don't have to put money to work yet, maybe, but I think it's a good place to focus. So what I did this morning was in searching to go to into these consumer staples, how would I do that? And so really quick, if you have a scan set up, and this can just sit in the back of your scan library, but is all you're looking for is something in a sector or an industry group that's outperformed the S&P over the last 3 months. So what this percent relative says is that if the S&P 500 from exactly 60 trading days ago to now is up, has outperformed the S&P. So if the S&P was up 1% and this was up 2%, then this scan would pick it up. And rather than just trying to find everything that's outperforming the S&P 500, and the reason not to do that is because obviously within the S&P 500, that's the average. So 250 would outperform immediately. And then going forward, all of the other stocks in the market. So you kind of need to break it out into groups and what you're trying to look for. So currently we know all of the consumer cyclicals have been doing well. Consumer staples have been doing less well. I mean, they're still holding up. Utilities are still holding up. Healthcare has been an outperformer, and that's kind of known as a defensive sector, but it's actually the biotech part of that that's been starting to rock a lot, really pushing the chart around. But even the big stuff like Humana and those types of names have been performing well. And some of the names like Merck, I did a DITC or Don't Ignore This Chart article on that the other day. Merck was less murky, I think is the title. But anyway, what I did was I ran this scan, and what on this scan, you've got consumer staples sector, and then you got the percent relative to the S&P 500, and it's just 60 days, and you want that to be greater than zero. And in order to find these indicators, you can just go in here and pick up this. And the way I picked up this one was percent relative. So hopefully that helps you find it if you're looking for it. So it's even just in the first grouping there. And you could either do percent change, the S&P is up 5% from some date or whatever. You could pick it that way, or you can use percent difference. I want stocks that are outperforming the S&P 500 by at least 5%, or percent relative. So anyway, try those. Running the scan generates this result. So we end up here with about 60 names, I think. Yeah, 55 names or so. Anyway, when we run the scan, the biggest thing that I like to do, obviously, is sort by the scooter ranking. And again, that for people who are new, that is a very quick sports ranking comparing each stock's performance against its peers. And in this case, the higher the number, this suggests it's performing better than 95% of the stocks out there. This is performing better than 88% of the stocks out there. And I think this one actually just had a merger or something. So we can delete it out of the chart list. Now let's go here and just click on this. So when you create a chart list, obviously it's going to come in as your default chart style, whatever you've got. I have buttons set up over here on the right, and these buttons, just want to make them very clear. These buttons here are all labeled, and when I was on the cruise recently, I met with some people and they were StockCharts clients and they didn't have buttons set up, and I couldn't help but think that's one of the things that makes the site so easy to use. So anyway, try and get those set up for yourself. But the way you do it is just click plus on the side here. I should do a little 2-minute, I'll try and add that 2-minute focus one of these days just to show you how to set that up and attach it to the end of a video. Okay, so anyway, I'm going to go to my 5-year setup, and my 5-year setup is very simple. I have the scooter ranking, which I think is important, relative strength compared to the S&P 500. So again, on this chart, we were scanning to make sure that over the last 3 months it was outperforming, and then the full stochastic shows us what's going on here. And then volume and the PPO. So with all of those things combined, I get a pretty good feel for the stock, and I like to change my whole chart list to that thing. So rather than coming in on a daily, I'll want to look at them on the weekly. So in this case, I'll just change the whole chart list to 5 years and a weekly view. Okay, now one of the things I missed when I was here is this scanning. And what I want to show on this is when you rank by scooter ranking, at the very bottom down here, you're going to number in sorted order. And what that does is whatever sort order you've picked, it will save them and put a number on the front here. So in this particular case, I've done it by scooter ranking, but we could do it by dividend. We could rank it by whatever we want as part of the scan. Okay, so let's go back and just scroll through some of these names. We're going to hit the view all button to do that. And in here, what we see is this Lamb Weston is just breaking out to new 52-week highs, and it's been holding up here for 4 weeks. A little bit extended. I don't know. It's been running since June, but you know, these charts, look at how strong this was for the last 2 years, and then it pulled back for 6 months, and looks like it's just setting up to get on its way again. So that one looks good. This one is more interesting. Not more interesting. It's new. You can see this is the first time the SCTR ranking got above where it's been for the last 5 years. So something seems to be changing in the stock. And again, it's been downtrending for 5 years. So maybe there's nothing new here. But obviously something is starting to push this stock. And I would just say if it can bounce off the 200-day or the 40-week green line here and start to turn back up, perhaps there's something there. And this one doesn't even pay a yield, so I would probably, if that's what I was looking for, I'd probably stay away. So here's Seneca Foods, and this one's been on a rip-roaring run, just broke out to new 2-year highs. Nothing wrong with that look, and it continues to climb. So every week looks pretty solid. Ingalls Market, this stock just broke out to a new 2-year high, and again, so we're in a safe sector. We're away from the China deal. We're away from a lot of the high technology names where kind of the whole market surges into and surges out of. And to avoid that, we can get into these other groups that are starting to move up nicely. So as we start to look through these stocks, and we'll come back and go through some more of the names right away, we're going to take a quick break for a commercial. When we come back, we'll continue to scroll through these names and just talk about how to look at them and how to evaluate them. Okay, and here we have Energizer Holdings. And the one thing I would say about this chart is it does look like a bunny hopping. We've got these bounces going on the chart. So it looks to me like if you're going to own this consumer staples name, you need to have an exit strategy. And one of the things that I would employ, I'm just going to click on this chart. This is easy to do in hindsight. It's harder to do in real time. But when you get an uptrend established in relative strength, and then you start to see that uptrend, and it's okay to take these lines here from over here and just kind of steal them. So go grab one of these and bring it over here. Just start to put it on here and say, okay, if this uptrend starts to break, I probably want to leave the stock. And until it breaks, I probably want to stay in. If you take the most, so out of this one, you can see the slope on the one I've picked is more aggressive. This one is more flat. So if I took this one over here, perhaps that's the line to use and you could be a little bit more patient. All depends on how aggressive you want to be. But if we just take a vertical line and drop down on here, I don't know, it's going to be somewhere in here. Let's go make that trend line. Just take this on here and say it's either price or up here, whichever one you want. This one actually, if we were to use the relative strength. So one of the things I think that happens in the market is when you have something that's outperforming in relative strength, it's a pretty good place to monitor. And when relative strength starts to fail, so something that was outperforming stops outperforming, and again, we're not using some small group here, we're using the S&P 500. When something outperforms and then stops outperforming, I think that's a better clue about that the investors that got into it have either started to change their mind or they're not continuing to push in. Anyway, I think those are four pretty nice sell signals that we've seen. And so in this case, I would just mount this line on the chart and whatever. If the trend started to pick up, then I'd probably pick a more aggressive slope. But for the most part, it looks like you get 3 to 6 months out of this stock, maybe in this case a year, before it rolls over. So this one's been running, broke out to new highs here just 2 months ago or a month ago. And what we want to watch for now is as long as that continues, we're probably okay. If that was to stop, then I'd probably want to leave. And hopefully that makes sense to everybody. So again, we've taken the purple area here that's comparing the S&P 500 to the stock or the stock to the S&P 500. When it's trending up, it means the stock is outperforming the S&P. And when I see those break on a weekly chart, that would make me worry. And so that would be something that would make me get more cautious here. Okay, so hopefully I've identified that for everybody. And then I just want to get back to my view all mode, sorry. Okay, and so here we go with Vector Group, and this one just continues to push up and to the right, but look at the scooter ranking, sitting up above 90 here and holding up here. I think this is that power bars and that kind of thing. Anyway, it's trending up nicely, got a yield of 12%, so it pays roughly 1% a month. Last paid out in September, so there's probably one due any day now, so you could get 3% just being in the yield. That's pretty sweet. You'll have to check the dates on that. Darling Ingredients, this one's just breaking out to new 52-week highs. I think that's a pretty sweet chart. Any yield? No yield. Fizz National Beverage, not sure that this is my best pick of the day, but it's breaking out to new 6-month highs. And maybe I guess that's the carbon dioxide in the bubbles or something lifting this thing up, but it's starting to move. PPO is still below zero, so a little bit cautionary there. Life Vantage Corp, this one just kind of jogging sideways, and it has a lot less momentum here than it had before. So unless this can really start to ramp up, I'd probably want to stay away and avoid that one. Pet Med Express, the margins in pet whatever are always huge, so I'm always interested in the early stage of the move, and then I would be out on the late stage of the move. So if this can't keep running here, I would probably let it go. It looks to me like as long as it can ride the 10-week, it's probably okay, and then that might be a filter. Alico, this one's breaking out to new 2-year highs this week, 3-year highs. Nothing wrong with that chart. So starting to like the way that one's picking up in pace, pays no dividend to speak of, and I have no idea what they do. But interesting chart. Kellogg's appears to have come out with a new cornflake or something because this is making new 52-week highs. So we're starting to push up here. And volume's a little quiet as we probably only had one volume bar within the last 4 months that's shown any sort of increased interest. But stocks can trend up on low volume for a long time, like they did in here. So again, I would just try to see if it can start outperforming the S&P 500. That's what we scanned for. So it's at new 3-month highs. Is all we want to see. Is if this starts to fail, then again, I'd let somebody else have it, because look at what the long-term picture is for this stock. Okay, Hain Celestial. This one's been just, I don't know if I'd call it trending higher. Remember, everything was beaten down off the 2019 low or 18 low, and we're just sitting up here, but it is new 52-week high territory. Trying to get going. PPO is above zero for the first time, so maybe they got something new and it's starting to improve. Anyway, the chart looks okay, and if it doesn't hold the moving averages, I'd probably let somebody else own it. Fresh Pet, that looks like an uptrend to me. So trying to buy this as it's breaking out through this 51, 52 level. That would have been a little better, but we're up around $56 now. Anyway, it looks to me like they got a successful formula going, and as long as that's going to hold up, it's probably pretty simple. Doesn't pay a dividend. Fresh Del Monte produce, this one's just starting to turn up after a 3-year slide, so I don't know what could be inducing the change, but apparently something's starting to pick up here. Celsius Holdings, nothing to talk about, chart sideways. Estee Lauder, this one just continues to grind higher. Seems to be some profit in the makeup business. Okay, looking at Kroger grocery store, this one's trending a little bit higher. Still got a ways to go to get through 52-week highs. The one thing on the scale over here on the right-hand side is the 5-year range on this chart, just to show you, is roughly a double. So from the lows to the highs is a double. Well, a lot of stocks can do that in 1 year. Return to their highs in commodity names or things like that. The one thing I would say is it's going to be very difficult to outperform the market if you don't have enough room on your scale, like if the stock isn't volatile enough to give you pushes. So in this case, it's up around the 75 level. It still hasn't started to become an outperformer, but it is hitting 6-month highs, so maybe that's okay. Doesn't pay any real dividend, 2%, I guess. So here's WD-40. I think we all know what that product does. Makes things slippery. So anyway, here we go. New 52-week high. Perhaps they got something else going on. Spectrum Brands, this one's trying to make a new 52-week high. PPO above zero for the first time in a couple of years. Might be worth watching. All of a sudden they could turn something up here. That would be good. Okay, so hopefully I'm giving you some ideas of how to analyze the stocks, how to sort for them. Let's go back and just review how we did the scan here. Again, we took just a group name, and the way to go get these group names is you go down here and you just say, I want to do the same thing for cyclicals, right? You grab that and hit add. It's always going to put it in the bottom, but what you want to do with your scan is you want to always make the thing that makes your scan engine run faster up at the top. So, you don't want to go look for relative strength on everything in the whole market if you only care about this group. So you would just put this in here, and again, you don't have to delete the old ones. You can just put the hashtags or the slashes in front of them, and then they won't operate the scan. Now, if I tried to turn my scan right here, it's not going to work, and the reason is, I'm going to get rid of this down here. The reason is I've got the word and at the front here, and your first formula always has to start with nothing in front of it. So it says unrecognized characters. So we need to get rid of this. And as soon as we do that and check our syntax, now it should work. Okay, so you've got it all set up. When you run your scan, again, you can do this on any sector at any time. If you think financials are starting to break out, then you can go run this scan and just say, what's starting to outperform? And I think if we take the example I'm just going to go and grab an open page here. JP Morgan. So JP Morgan, as it broke out to new highs here above this 115 level, what we started to see was the scooter ranking improve, and the stock was picking up. Relative strength started to make new 3-month highs, picking up, and here we go. It's been trending up ever since. And so to me, I would switch it to a weekly chart, and then I would just, not that I think you need to trade in and out of JP Morgan, but I would just keep a trend line on here. And if it started to break, then that would make me more cautious that the trend was over. And again, this has been almost a 20% move in a few months on JP Morgan from 115 to 135. So $20, I guess 10% move. Anyway, when you have these uptrends start to break, in this case, in JP Morgan, again, it's such a stable organization that I don't think you want to trade in and out of this one as much as the Ever Ready Bunny that I showed you earlier. But what you see here is the relative strength when something that was uptrending starts to stop uptrending. That's a better place to get out. And then here, same idea. Again, we're talking about marginal outperformance because JP Morgan is such a stalwart. But when these trends end, I think it's better that you're aware that what was outperforming has stopped outperforming, and this can help you get away from strong names and at least give you a reason to sell and start to look for things that might continue to go up. Obviously, if you're in JP Morgan over time, back here in the $60 range, I think that's when they had their big announcement that they had lost $5 billion on one trade or whatever. And even for JP Morgan, that was like literally a blip, but the stock didn't do anything for a year. When it started to make new 52-week highs, it's been a pretty good push. And right in here, you see this 113, 115 layer. Well, we just started to break through that, and the stock is off to the races. So again, you don't have to work that hard to make these scans work. I think the key thing is, if all of a sudden the trade deal didn't work and people were going to start to rotate into defensive sectors or something like that, then I think it's more important than ever that you have a tool to do that, and just go grab some relative strength stuff and say what's starting to outperform in whatever non-international areas of the market. You're going to go into that consumer staples area, or into healthcare, or into utilities, whatever it is. You can use these to rotate in, and hopefully that quick little scan at the beginning helps you out. If you have more questions, again, a lot of the times my presentations talk about areas to look in. For specifically over on gregschnell.com, what you'd get is more of a big market overview, talking about what areas are starting to brighten up and look that way. So if you get the time, on Friday at 11, I'll be on that market vision. So go over to earningsbeats.com and you can find the page there and put your name in, and then we'll send you an email with a link to the production or the show at that time. So Friday at 11 Eastern. Thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel. Thanks, everybody. Have a great week. See you Friday. Bye-bye.